Yo guys, what's up? How's it going? So today I want to cover options. And what is an option? Why do we use options? How do we use options? And how do we make money with options? So first of all, let me tell you, options can be risky. I'm not an investment advisor, so this is for educational and informational purposes only. That said, let's get into it. Tesla has been a stock that I've been playing again recently with options. All right, so at the beginning of the week, I had sold a put for about $30. Go back and watch my options video on Monday, I think, daily options trade on Monday, and I sold that put for about $30 at $750. It was pretty early in the morning, stock was up early, and of course, it came crashing down ever since. Okay? Not good. And it actually recovered today. It's back up to 710. So right at the end of the day, I was able to roll that option to the next week. So in order to do that, you go watch my last video that I made, the how to roll options with the big picture of the Tesla right in the middle. So hopefully you don't roll a Tesla. That'd be bad. But in this case, it's good because it saved me from putting out $75,000 to cover this put, which is a big chunk of change for a lot of people, including me. So I didn't want to do that right now. You can see I'm accumulating Tesla in smaller chunks, little by little. I wish I would have got it when I was $600. But back to the puts, back to the options. So I like to sell put options when I think the stock is going to go up or maybe stay around the same level, so I can reduce the cost basis. So right now my cost basis in this $750 put, if I were to get put the stock next week, would be $715. Okay, how did I get to that number? Okay, so I took $750 minus $30 for the first put that I did. It takes me down to $720. All right, and I just rolled this option again today for $500, which takes it down to, $715 per share. So just like that, I'm making money. So look at it right now, $710. So that's not bad, right? I'm only losing $500 getting into Tesla. And then, if I do get put the stock next week, depending on what the price is, it might go up over $750, it might not. Doesn't really matter. As long as it's between $715 and $750, I'm making money. If it goes over $750, I'm making lots of money. And if I do get put the stock, I can turn around and sell the call on top of it. All right, so that's a good thing. So let's go back and look at the quotes for Tesla calls right now. All right. So I said right now my cost basis is $715. If I were to go out a week and sell a call for $715, I could rake in $2,500. Can't really beat that, right? But if I wanted to be greedy and say, okay, all that money I made is already profit, so I want to break even. I want to say sell it at $750. That's $1,200. All right, I can't complain about that either. All right, or even if I want to go higher, if I want to go up to $760, $965, or $910, the spread's kind of high on the weeklies. If you go out to the monthlies, so the monthlies do have the advantage the spread is smaller. So when you buy options, it's a little more. When you sell options, it's a little less, and the difference between the two is called the spread. All right, you can see here the spread at 710 is about 70 cents. All right, let's go back to the weekly and look at 710, and the spread is about actually 75 cents. That's not too bad. So okay, that's not bad actually. If you look at here, it's pretty small because they're already done, so it doesn't matter. So anyway, that's kind of my options strategy going forward, at least with Tesla. I'm doing that with a few other companies as well. Let's go back to my positions. All right, yeah, you can see Boeing. I've actually done this a lot with Boeing. You can see I'm selling both. I was selling both sides, right? I'd sell the put and I'd sell the call. So I'd have a cash covered put and I'd have a covered call. So I'd make money on both sides. And as long as my ARORC is at least, I don't know, 30%, I'm good with it. So ARORC, if you guys want to Google that, go ahead. But it's ARORC, annualized return of risk capital. Yeah, I got it. I never remember the term, but I know what it means. All right, it's basically how much percentage you're making on your money. So say like in Boeing, I'm risking here in this put, I'm risking $26,500. All right, great. What am I getting paid to risk that money? If it's not at least 30%, I'm not doing it, right? So let's go back to the quotes. So let's keep going with Boeing. All right. So you guys saw my cost basis was like, I don't remember, 230. So in order for that to make sense to do long term, if you go a week out, all right, I could say I want to sell it for $460. So it would be $460. It's a little harder math. So it would be 460, not at least, 30%. Not going to do it. But you do that every week, it's 52 times that number, all right? As opposed to doing it the monthlies. So usually you can collect a lot more premium. Your AWORK's going to be a lot higher if you do weekly options. You can see here the spread on the weekly is actually not too bad, 30 cents. Okay, got the money. And on the monthly, it's actually 15 cents, half of that. So it's actually a lot better spread. Although it's not too terrible. I mean, I've seen spreads as high as $1, $2. I know when GameStop was going crazy, there was huge spreads in there. You could have a $5 spread, and that's just nuts. It's hard to make money that way. All right, so let's go back to my positions. Hopefully that made sense to somebody out there. So another thing that I was considering, if you watch my last options trade, I considered actually closing this call. All right. So anytime you get 50% profit on an option, you can consider closing it. Now, I put a trade in just before the bell. It didn't get picked up, and I was getting a little greedy, but I was like, okay, fine. It's going to expire next week anyway. I was going to take the risk. So anytime you have 50% profit, it's not a bad idea to think about closing it, right? If the stock's kind of teetering, if there's questionable, if there's earnings coming up, because earnings could really move the stock a lot. So you want to lock in those gains. Even this 230 call, right? I mean, I wouldn't close this at this point because I had just rolled this from the prior month, so it's artificially high. I'd have to go back and look what I originally sold the call for. And I'm pretty sure it wasn't $9.45. It might have been, but it's probably like $6 or $7. So, but if you do that enough months in a row, right, you keep rolling and rolling and rolling. Go back and watch my other options videos up here in the corner. Hopefully it'll pop up if I can put it in there. You accumulate all this cash over time, and you can use that cash to reduce the cost basis. Now, the reduced cost basis of this Boeing stock, actually, I think I'm down to about $185 reduced cost basis from all the puts and calls that I've sold on it over the last, I don't know, year, 6 months, whatever it was. So it's not doing bad. I was doing the same thing with Beyond Meat a while back. You guys, I'm not sure if I started my channel before that, but I had over 1,000 shares of Beyond, I picked up a bunch at 50 bucks and I got rid of most of them. And I got called out because the stock went up so much. So I got called out on a bunch of them, and I just got back in, I guess, around this area with the puts that I was putting on, the puts and the calls. So anyway, sometimes it works out great, sometimes not, but my account's doing okay. I still made money on it. CCIV is another one I'm doing this with. All right, I have a $19 put for May. That's a monthly expiration. I don't think there's weeklies actually in CCIV, but it's the same idea, right? You're doing reducing the cost basis every month by selling a put or selling a call. I haven't really sold any calls on CCIV because it's one of those stocks where it could go up quickly. You know, the SPACs have been taking kind of a hit recently. So GoEV is another one of those stocks that I have. I just bought in with some of these. That's a pretty good deal. So you can see I'm going pretty heavy into GoEV. I think it's a really good platform. They got some bad press. Strategy might be a little different. Some leadership left. And that's probably okay. When you go from design into manufacturing, it takes really a different skill set of leaders to make that transition and to be successful in the business. So we'll see what happens with GoEV, but I'm very bullish on it. I really like the platform, and I like the concept. So we'll see how that goes. All right, guys. Let me know if this has been useful to you, and hopefully you understand a little bit more now about puts and calls and how they work. Stay tuned for my next video. I'm going to be talking about covered calls here eventually, and naked calls, and I'll make reference to that next video. Alright guys, remember, smash that like button for the YouTube algorithm, and subscribe to the channel for wealth building techniques, options trades, and more. Thanks for watching.